The world of finance is no stranger to automation. For decades, large institutions have used complex algorithms to execute trades at lightning speed. This is known as algorithmic trading, and it has become increasingly accessible to individual investors thanks to platforms like Alpaca. In essence, an algorithmic trading bot is a set of instructions written in a programming language like Python that automatically buys or sells assets based on predefined criteria. Imagine this. You have a set of rules that dictate when to buy or sell Apple stock based on its price movements. Instead of constantly monitoring the markets yourself, you could automate this process with a trading bot. The bot would connect to your brokerage account and execute trades on your behalf, freeing you from the need to watch every tick of the market. This approach offers several advantages. First, it eliminates emotional decision-making, which can often lead to poor outcomes in trading. Second, bots can react to market changes much faster than humans, potentially capitalizing on fleeting opportunities. Finally, algorithmic trading allows you to backtest your strategies using historical data, giving you a better understanding of their potential risks and rewards. In this essay, we will explore the process of building a simple Apple stock trading bot using Python and the Alpaca Trade API. We will cover the necessary setup, key functions, and some basic trading logic. Remember, while this guide provides a foundation, successful algorithmic trading requires continuous learning, adaptation, and a deep understanding of the markets. Before we can unleash our trading bot on the market, we need to lay the groundwork. This involves setting up an Alpaca account and configuring our Python environment. Alpaca is a commission-free brokerage platform that offers a robust API for algorithmic trading. To get started, head over to the Alpaca website and create an account. Once your account is up and running, navigate to the API keys section of your dashboard. Here you will find two crucial pieces of information: your API key and your secret key. These keys act as your digital credentials, allowing your trading bot to interact with your Alpaca account. Keep these keys safe and secure, as anyone with access to them can control your trading activity. With your API keys in hand, we can move on to setting up our Python environment. First, ensure that you have Python installed on your system. Next, we'll use pip, Python's package installer, to install the Alpaca Trade API library. Open your terminal or command prompt and type. This command will download and install the necessary files for interacting with the Alpaca API from your Python code. With our environment configured and the Alpaca library installed, we're ready to start coding our trading bot. Now that our environment is ready, let's dive into the core functions that will power our Apple stock trading bot. These functions will allow us to connect to the Alpaca API, retrieve account information, fetch stock data, and execute trades. First, we need to establish a connection to the Alpaca API using our previously obtained API key and secret key. This is accomplished using the object from the Alpaca Trade API library. Once connected, we can retrieve important information like our available cash balance, which will dictate how much we can invest. Next, we need functions to place buy and sell orders for Apple stock. The Alpaca API provides straightforward methods for this for buying and selling. These methods typically require parameters like the symbol of the asset, AAPL for Apple, the quantity to trade, the order type, market or limit, and the time in force, for example, day order or good till canceled. Finally, we need a function to fetch the current price of Apple stock. This information is crucial for our trading logic as our bot will make decisions based on price movements. The Alpaca API's method provides the last traded price for a given symbol. With these essential functions in place, we can start building the brains of our trading bot, the trading logic itself. Section 4. Building the trading logic. The heart of any trading bot lies in its trading logic, the rules that determine when to buy, sell, or hold an asset. For our simple Apple stock bot, we'll implement a basic moving average crossover strategy. This strategy involves calculating two moving averages of Apple's price, a shorter-term moving average and a longer-term moving average. When the shorter-term moving average crosses above the longer-term moving average, it signals a potential bullish trend, prompting a buy order. Conversely, when the shorter-term moving average crosses below the longer-term moving average, it suggests a bearish trend, triggering a sell order. We can encapsulate this logic within a function. This function would first fetch the current price of Apple stock and calculate the short-term and long-term moving averages. Then, it would compare the two moving averages and generate buy or sell signals accordingly. Remember, this is a very basic example of trading logic. Successful algorithmic trading often involves more complex strategies, risk management rules, and continuous optimization. Section 5. Error handling, protecting your investments. In the world of software development, things don't always go as planned. Network connections can drop, APIs can experience downtime, and unexpected data can cause errors in our code. This is especially critical in trading where errors can lead to financial losses. To mitigate these risks, robust error handling is essential. We can achieve this in Python using blocks. These blocks allow us to gracefully handle exceptions, errors that occurred during program execution, preventing our bot from crashing and potentially making erroneous trades. For instance, when fetching Apple's stock price, we can wrap the API call within a block. If the API request fails for any reason, the block can catch the exception, log the error message, and potentially trigger a notification system to alert us of the issue. By implementing comprehensive error handling throughout our code, we can enhance the reliability and resilience of our trading bot, protecting our investments from unexpected events. Section 6. The importance of paper trading. Before deploying our trading bot in the real world, it's crucial to thoroughly test its performance and fine-tune its parameters. This is where paper trading comes in. Paper trading, also known as simulated trading, allows us to test our strategies using virtual money in a risk-free environment. Alpaca provides a paper trading environment that mirrors real market conditions. We can connect our bot to the paper trading API endpoint and observe its behavior over time. This allows us to evaluate the effectiveness of our trading logic, identify potential flaws, and optimize our parameters without risking actual capital. It's highly recommended to conduct extensive paper trading before deploying your bot in a live trading environment. This period of testing and refinement can significantly improve your chances of success and reduce the likelihood of costly mistakes. Section 7. Navigating the risks of algorithmic trading. While algorithmic trading offers numerous advantages, it's crucial to approach it with a healthy dose of caution. Trading, even with automation, involves inherent risks, and it's essential to be aware of these risks before diving in. First and foremost, remember that past performance is not indicative of future results. Just because a strategy has performed well in backtests or paper trading doesn't guarantee future profits. Market conditions are constantly changing, and what worked yesterday might not work tomorrow. Second, be mindful of the potential for technical issues. Software bugs, network connectivity problems, or API outages can all disrupt your bot's operation, potentially leading to unexpected losses. Thorough testing and robust error handling can mitigate these risks, but they cannot eliminate them entirely. Finally, understand that algorithmic trading is not a get-rich-quick scheme. It requires time, effort, continuous learning, and a solid understanding of the markets to be successful. Before committing real capital, educate yourself on trading principles, risk management techniques, and the specific strategies you plan to employ. In conclusion, building an Apple stock trading bot with Python and the Alpaca API can be an exciting and potentially rewarding endeavor. However, it's crucial to approach algorithmic trading with a realistic mindset, acknowledging both its potential benefits and inherent risks. By combining technical proficiency with sound trading principles and a commitment to continuous learning, you can navigate the world of algorithmic trading with greater confidence and increase your chances of success.